We all know that Nvidia is a leader in AI infrastructure, but there is a new company that could challenge the growth over the next 5 years. CoreWeave has exploded nearly 250% since IPO. In this video, we're going to break down everything you need to know about the company to see if it's a viable long-term investment. This is the Investor Apprentice channel where I research high potential or undervalued stocks to find out if they're a stable long-term investment. If you don't want to miss on any future videos, drop us a follow. And with all that being said, let's get into the video. So having a bit of a background look into the company CoreWeave, stock ticker CRWV, is an AI cloud computing platform that provides the latest GPU infrastructure for AI and machine learning workloads. So what this means is that it offers specialized cloud services to simplify the process of building, training and running large AI models. They went public on the 28th of March 2025 and raised $1.5 billion in what was the largest offering for a US tech stock since 2021. The current market cap is about $73.7 billion, and their headquarters is located in New Jersey in the United States, with offices all across the US and one in the UK. They are self-proclaimed as being the world's first AI hyperscaler, and what makes them different to the likes of Amazon's AWS, Azure, or Google Cloud is that they offer infrastructure and software platforms specifically for AI. They originally began as a cryptocurrency miner, but made the decision to scale and become an AI cloud platform in 2018. In more recent years, the AI boom has generated large returns, and CoreWeave was perfectly positioned to take advantage of this. So you might be thinking, what does a company actually do? So CoreWeave is an AI hyperscaler that provides specialized high-performance cloud computing designed to train and run large AI models. So put simply, they rent out the most powerful GPUs to companies to contribute in building the future of AI. So having a look into their core business model, GPU computing is one of the biggest things that has propelled CoreWeave into the company they are. They have access to the most advanced Nvidia GPUs like the latest Blackwell series. These GPUs are the workhorse behind the processing architecture and is critical in how the company can scale. Specialized data centers, they have purpose-built facilities powerful enough to supply their customers. And then their customers like OpenAI use CoreWeave to train their LLMs, but they also have high performance computing cases such as scientific research like drug discovery, which is another upside on the company CoreWeave. They also have a significant advantage by focusing solely on AI. They claim that their workload is more efficient and their close partnership with Nvidia helps them secure deals easily when you compare it to the likes of the other cloud services by Amazon and Microsoft. This is because they are solely focused on AI, which has allowed them to grow so much this year. So we can now have a deeper look into the financials behind the company. The current share price of the company CoreWeave is about $136, and since the IPO, they have made about 250% move year to date. So having a look at the latest earnings report, the top line growth has been very good. Revenue has increased 207% year over year, achieving $1.2 billion, which significantly beat analyst expectations driven by the demand of the specialized GPU infrastructure. The revenue backlog, they achieved $30.1 billion, which is double year to date. This metric reflects the performance under long-term contracts like the one with OpenAI. They recently signed an additional $4 billion expansion with OpenAI, adding to the existing $12 billion deal. Adjusted EBITDA they also beat on and are up about 200% year over year. This 62% margin demonstrates the operational efficiency and capacity that CoreWeave is able to operate at. So CoreWeave's latest earning presented a classic growth at all cost picture with proof of constant growing AI demand and increasing margins. Having a look at the intrinsic value, the current value seems fairly priced from a technical perspective, but estimates and price targets from Wall Street say that there's still quite a lot of potential upside with about a 32% move by the end of next year. If they're able to continue expansion, I can see the growth being constant. And it's important to remember that they only went public this year, so it's still a growing company. They have moved quite a lot, so it might fall back a bit, but over time I can see this company growing. So in conclusion, CoreWeave is one of the latest mining companies to become an AI play. They have gained significant interest from the large deals they have made with Nvidia and OpenAI, and if they are able to keep securing these deals like this, I can see the growth being constant. So is it a buy for me right now? They went public at about $0 and ran to 190, so there has been a lot of volatility. Looking at the price to sales ratio, it seems more on the expensive side, but the earnings really do show the growth. For a long-term investment, I don't think you can go wrong, and I'd be looking into buying at about less than $100, but I think I'd rather own Nebius for the long term. So thank you for watching the video. Remember to like, subscribe and leave a comment below as it really helps out the channel. I'm documenting my whole investing journey as a student apprentice here on YouTube, and if you want more videos like this, just let me know. Thank you for watching.